Welcome everyone to the Euro trade. Let's have some coffee together. Now first I'm going to do just a little sort of recap of the previous month. This is one of 3 accounts that I have. I don't copy trade them. Sometimes I will do similar trades on 2 of them, and then I kind of reserve one if I want to try maybe another trade or so. If you're here for the first time, my name is Mark Stoker D, and I've been trading for 18 years. Now, out of that, I've been trading for prop firms for about 13 years, and you will see me trade things like copper, platinum, gasoline futures, sometimes crude oil, although crude oil and I are currently on a break. Trial separation, still in progress. I'm still not entirely convinced in the liquidity of crude oil on a daily basis, and I want my products to have a pretty consistent profitability across the board. So this account is the one that's performing pretty well. As you can see, I try to keep my losing days to less than my winners, but yesterday I did catch the short on copper, and I managed to nab the big drop that happened just before COMEX open. And I did take a couple of grand payout from this account. I also took a payout from this one as well. And I have the third one that kind of started a little bit later. And I also have a little bit of a boo-boo on that one, even though it's in profit. But I mistakenly entered 5 minis one day instead of 5 micros. Didn't notice in time. So, I ended up with a little bit of a dent in there. But hey, it happens. It's all right. But all 3 are profitable. So, yeah. Anyways, let's see what copper is doing today. Copper had a massive day, obviously, yesterday. It was huge, right? Let me see what the average range ended up. Yeah, so it was 680 ticks to the downside. So for those of you who are sleeping on some of these moves and insisting on trading equities, maybe it's time to consider some other products, but just be mindful of the daily ranges as an average. You can use ATR on the daily chart to have a look at those, even though I have some of my ways of figuring out what the product actually has for the average session range as well as the average daily range, and then I use those as levels. You can see those markers here. So we have the ADR high possibility for today at 474.45, so it could go all the way up there, but it could also drop down to 453.50. If you've been here for a hot minute, I would not be surprised if you already know what these stand for. I effectively use a dynamically tracked highs and lows until the mean average across the previous 10 days is exceeded. I know that some people on TradingView have tried to copy our Blotic DR indicator and they did it wrong. So yeah. Oops, I just moved this. But today we're opening inside value. For London, it's a massive value, so as far as the open sentiment goes, that is not that indicative of anything because of the outlier size of the value area from the previous session. So I have to mainly guide myself by the options today and by what the TPO profile for the current day is working. I'm also going to say I'm a little bit slow today, had a bit of a rough night. That was a bit challenging. I had a lot of pain in my stomach and stuff, so don't know what that's all about. But yeah, so feeling a little bit exhausted. I don't know how much I'm going to be trading today because of that. I am supposed to be on the rotating segment later today, but I'm going to try and have a big break, nice sleep. And also it's NFP week. So tomorrow we have non-farm payrolls, only one of the biggest leading indicators around. And therefore, I wouldn't be surprised if everything is still a little range bound. Yesterday's movement in commodities, I would classify as the unwinding for the end of the month, right? We've seen it in gold. Let me just save this. Here's gold on the daily chart. Here is copper, same thing. Equities made an attempt of doing the same and then recovered during power hour. They were pretty undecided most of the day, and then obviously that power hour came, and MOC just pushed it really high up. So yeah, still an attempt at an unwinding, but definitely bulls in control in equities. Let's have a look at NQ. Is that different? I think we had some earnings last night as well. Correct me if I'm wrong. Dr. J is not coming today. I don't know why they keep doing this. So Jerome is with us on Wednesdays, okay? And yet whoever's creating these video titles, because that's not me, it's somebody from the Topstep team, I think they just copy it in from the previous day, and they've been doing that for a while. So I need to get in touch with someone today to make sure that that's only on Wednesdays. So yeah, but we can't have new Wednesdays every day because then we would never trade. Therefore, we designated one day to teach you about the neuroscience side of things and how we can improve our some of our bad habits and replace them with better habits. Now, talking about the plan for next month, I'm not going to be sizing up too much, so I'm still going to stick to like 5 micros, maybe 1 mini, if markets allow. But I really want to build up a little bit of a balance here before I start trading larger. I'm a huge proponent of not trading with size and trading within the account buffer, right? Rather than risking, quarter of your entire account, I don't like doing that. Like the most I will risk in a single trade, and mind you, I'm somebody who doesn't trade a million trades per day, I will probably risk between 4 to maybe 10%, but that's usually in the beginning. To put that in monetary terms, I typically risk $350 to $400 per any single trade. At the moment, my risk settings are set to $350, and that's going to stay like that. Now, depending on how the volatility of the product is looking, I will either choose micros or I will choose 1 mini. And also, if I manage to get the market structure that allows me to position myself with a slightly smaller stop than my default stop loss size, I will maybe use a mini. But aside from that, you will see me mostly trade micros until, we have some more cash to play with. Vital says, hi D, could you tell us what's really happening during power hour? How is that enormous volume emerging on both sides and price barely moves much? Would you classify that this doesn't move much? This is YM? You think this is not moving much? I mean, this is what? Let's see. So just for the final 30 minutes, YM. Actually, let's do measuring tools for this purpose. One 30-minute candle, 500 tick movement. Vital, how much movement do you want? Like, I would say that's a lot of movement, but hey, what do I know? It's a lot of movement, but on any given day, it really depends how many people are still looking to position themselves into the end of the day. And there's a thing called mark to market, where the FCMs and hedge funds and even some prop firms, like I've worked in prop firms where they were using mark to market to figure out their intraday risk and the overnight risk. So with that firm, we could trade overnight, but our position sizes would have to be a third less of whatever we were doing intraday. So you could swing trade, but because of the overnight margins, they required you to adjust your positions to account for that. That's a lot of movement, right? And if we're going to be fickle, well, this movement actually started earlier, right? It started around 9 a.m. Central. Then lunchtime didn't really bring much action, typically range bound. Then you have power hour. In the last 30 minutes, we go massively higher. So I don't know what you're looking at. 500 ticks in the last 30 minutes is a lot of movement. Are we looking at the same chart? I don't know. Like if we're talking GC and some of the other products that are closing like 90 minutes or 2.5 hours before the actual electronic close, yeah, they're not going to move much on most days. So it's different. You need to know your end times for the former pit hours, and that's still very much a thing in electronic trading. So it's not, let's say gold closes at, let me just do the conversion. Gold closes 12:30 p.m. Central, I think. Yeah, 2, 3, 4, 5, 6. Yeah. And crude oil and gasoline futures, they close an hour later than that, so at 1:30 p.m. Central. So if you're looking for some massive amount of movement during actual power hour, that's just an equities play. That's not a commodities play. You're going to see very few days that do exist. You can have gold still moving relatively decently during those times, but it's not going to be the norm, right? And it's representative in volume as well. Can we say that we had less volume during the lunchtime hours and then more volume during power hour? Yeah. But why it happens is because you have this thing called the market on close, where everybody who wants to be in that day has to get their orders in that day, in those last 10 minutes especially. So MOC causes a huge increase in volume around about that time, and you shouldn't be trading maybe straight into it unless you're already in quite a bit of profit. But I actually love trading equities during that time of day. I don't do it often if I've had a very good day, because out of all the equities, DAX is the one that I prefer, and that typically trades for the European session with the Euro trade, right? Really hoping we're going to get that this year, so we'll see. Paul H says, sorry you had a rough night, you look tired. I know, I'm so sorry for looking a little bit messy today, but I couldn't be bothered with the makeup. I'm going to look better. Like, I'm going to, do the stream. I don't like doing because I have some painkillers that I can take, but they're opioids, so they make me slurry and whatever, so I'm going to take them after the stream. I'm probably going to have the stream a little bit shorter today, so we'll be here for another, 45 minutes rather than doing the full hour and a half, just to give me time to reset and get ready for the rest of the day. But don't worry, I've been going through this for 3 years, so I'm kind of used to it. Virus says, morning D, I just requested my first payout, but I wasn't asked for banking details. Would I be asked once the request is processed? Did I forget? And we gave that info to Topstep at account creation. Did you use Wise or ACH? Because if you're going through Wise, all they really need is your Wise email. And from what I remember when I was first putting in my details, which was a while ago, did you also fill out your tax form? Like you have to fill out the tax form before you, if you haven't, that's going to cause, like it's not a big deal, but you do need to fill out the tax form, then maybe get back to the risk team to tell them that there's been a little bit of a boo-boo on your end and that you haven't given them all the details. But yeah. What's my bias for GC and NQ? GC, I at the moment have no bias because we had a massive day yesterday, and I'm expecting a little bit of a hangover day across the board. This is also reflected in copper as well as gold. Gold normally has like quite large initial balance ranges, and today it's an okay initial balance range at 114, but I would say that's still low for London. And we're building supplies right above it, right above the current market structure. It could make an attempt at a mean reversion upside, but don't expect a massive move. People will be waiting for NFP tomorrow, okay? So yeah. Yeah, so hangover day. Every time you have very big outlier days, I'm always like, ew, I don't really want to trade the next day. So I was saying, oh, you look great, D, Jesus, rude. Tyler, me and Paul know each other, so he knows what I look like when I'm, nicely rested and not in pain. So it's not rude, it's just a friend saying to another friend, going, hey, take care of yourself. So I actually appreciate that. Tramadol. Yeah, I think I have something stronger actually than tramadol, unfortunately. So yeah. If there is an issue, I would rather contact them, Virus. Because sometimes they're like, oh, we don't have the, you have to understand that the risk team has like thousands of people that they're dealing with on a daily basis. If you take in all the XFA traders, all of the live traders, it's a lot of people. So if you feel that you've done something that where they don't have all the details, it's your first payout, you want to make sure that it's all done properly, just communicate with them. I don't know why people are so, how would I even say this? Reluctant to get in touch with the risk team, and like I know that Mick might seem a little bit, mean at times, but they're really reasonable people, and if you're requesting a payout, they're glad to see it, and they're like, yeah, let's help you out. So just shoot them an email, just say, hey, made a little mistake, I think, not sure if I gave you all the details or how this works. It's my first payout, please help. They might take a day or so to come back to you, but they'll come back to you and then you'll know where you are. But for me, every time I do a payout, it takes maybe a couple of days to reach my Wise account because I do it via Wise. So yeah. Yeah, don't trade before the payout is processed. So it's actually a great practice to just have a bit of a chill out day after you take a payout, and don't do the thing where you take a payout then you don't change your size back down, especially if the payout was sizable. If you're taking like 50% of the account, you have to reduce the position size by 50% as well, because now you don't have enough money in there, right? And for most of you on the first payout, it's not going to be a 100K account, right? You're not going to have 100,000 buffer, and they're like, oh yeah, I'll just take 50 grand and carry on trading, whatever you were trading. So be sensible. Bankroll management is a real thing. I don't like trading NQ and ES for this time of day. because I look at how DAX is moving and I'm just going, man, that's just no. If you need to trade something out of the products that we have on Topstep, I would say YM is probably the more wider traded product during the London session. Let's compare how these two are doing. So YM on the left and Q on the right. Do some measuring. $65 ticks in the last current, whatever, 30 minutes. And then are these points. These points. These candles look messy to me on NQ. So if you take in the difference between these two, now let me calculate that quickly. So difference in speed. So how I do that is take two products and then to divide. So 950 versus 397. So NQ is about 2.4 times more volatile than YM. So if you were comparing the two by the tick size in relation to how much they're actually moving, you would actually need to have an equivalent of 155 ticks movement. So it is 175, so they're both moving, but let's have a look at the composition of the candles. Same time frame, 30 minutes. Which one of these looks cleaner to you? Not that either of them look that clean, but which one looks like it doesn't have too many wicks and is actually starting to emerge into a bit of a trend? Is this one, right? Because to me, NQ just looks very wicky and indecisive. This is out of hours. Out of hours. Also volume. Let's go down to 15-minute chart. These guys are trying to move more. And NQ volume is just meh. But yeah, depends what you're after, right? I'm after swings. If you're after a few scalps, knock yourself out, man, you know? There's a million ways to peel an onion, as Hogue likes to say. Mo says, morning D, how do you perceive this Ukraine-USA minerals deal? Bullish or bearish for the metals? I would like to see what happens with China copper, because they're saying that they're going to have copper problems. To me, that's more significant since China accounts for a huge chunk of copper demand. So, you know, I don't feel like the Ukraine-USA mineral deal is as significant from the macro picture. But again, I'm not a macro trader, not a fundamentalist. I'm a technician, so I will trade whatever is in front of me, right? I'm not going to try and speculate what the authors are trying to do. I'll just see, you know, whether there's a mean reversion opportunity. I'm not looking to establish a position that's going to last me for the next 3 months, 6 months, a year. Though that's what the institutions are doing. I'm really not interested in doing that at all. Let's see what this copper does here with this gamma wall here. They overshot it a little bit, so I would like to see the price go below. But right now, it's all a bit meh. Meh. How are the markets today, D? Meh. They have the ick factor. Roy, what are you doing, man? It says XFA blown. Were you sizing up? Were you oversizing? Do I have to get the parrot out? What were you doing? For future reference. Slice down, slow down. Slice down, slow down. Slice down, slow down. Can we remember to size down, slow down, please? And then we won't have blown XFAs. I mean, you know, I spent so much time and effort telling people, size down, slow down. And what do? They size up and they do more trading. Why? Because your fight or flight goes out of the, you know, takes you over. Chris says, can you trade NQ with a 50K account? You can, but just because you can doesn't mean you shouldn't. You should. So I would say M and Q only for the 50Ks. To be honest, M and Q only even for the 150K ones, because you only have like $4.5 grand to work with. So if you in real life, away from prop trading and you know, sim, if you only had 4.5K to work with, would you plow in one full NQ? How long would the 4.5K last you? And you know, you don't have a reset, it's your own 4.5K. Why are we not treating these accounts and respecting these accounts? Okay? Okay, it sounds like a South Park character. Okay. Copper is not looking good today. Yeah, it's a hangover day, but I am still expecting that it's gonna go down a little bit. So I would only be expecting it to get down to maybe VWAP, perhaps GEX1 at 62, and that's it. The tactical trader is asking me, what do you think about pyramiding or adding to a winning position? I think that most people do it wrong. I think they start with like 1, and then it moves a bazillion ticks in their favor, and then they move to another one. And in that case, they totally screw up the average entry, and then they start messing around with stops. Because here's a thought. Whilst traders, you know, us as traders, we are considered risk takers. How would I put this? Because we are involved in something risky, day trading, putting money on the line. But apart from that, most of you spend all of your effort to then avoid the pain of committing risk to a good trading idea. So you start messing with trailing stops, and why? Because you're oversized. Because the loss that you're about to suffer, if you're wrong, is too big for the account to handle. Like there's no other explanation, right? That is the reason why you can't control yourself, your emotions, why you blow XFAs. You're trading with risk of ruin that is sky high. That's it. Here's something that Coach Ray, who's one of my early market talkers, we met in 2019, he says if you put on a trade and you can't walk away from the desk, you're trading with too much size. Totally 100% agree with that. So let that be your measure. Are you watching every tick when you enter a trade? Are you there all day while you're in a trade? Are you over trading? Why? Like, you know, why are you over trading? Look at the number of my trades per day. 1 trade, 8 trades, 10 trades, 11, 3 trades, 3 trades, 2 trades, 5 trades, 5 trades, 3 trades. Yeah? So you only have yourself to blame. I mean, I don't even know what to say anymore. It's just like, calm blown. Okay. What are you doing next? What is your intention for the next run? Are you going to do the same thing? Or are you going to change things? The ball is in your court now, Roy. What does Gex want? It's a gamma exposure level where there's quite a bit of interest in the options chain, and where market makers might feel the need to adjust their inventory either to the opposite side or to act as an accelerator. Now, today, I don't think that these levels are going to be accelerators. Usually when you have a few of them so close together, it's likely that once we run into this area, it's going to be chop. And that's why any sort of trade that I do is going to be on the smaller side. So it's not going to be that massive swing that I had yesterday. Because the massive swing, remember, I've been yapping on about the overlapping values of several days. We started with 3 days, then 4 days, then we had 5 days of overlapping value for COMEX. And then I posted on Twitter, this looks like a distribution, which is usually followed by a liquidation in about 70% of the cases. And what do we have after the 5th day? Smash. Liquidation. But after liquidation, you typically have these like hangover days that are like, we made money yesterday, so we don't need to do it again today. Let's go to the pub. Those are the traders, right? That's what we used to do. You make money, you go to the pub. You don't stay in the office to trade more. You go and have fun. You go back to your family. You go out. You go to a strip club. In a lot of the cases back in the olden days. So, Riley says, my days usually see 4 to 5 trades per day, and I view the markets for roughly 12 hours. Why? Man, 12 hours, dude. Like, I look at maybe 4 hours across the entire day. 2 hours for, maybe 3 hours for the London session, another couple of hours for the New York session. Done. Like, we want to stick away from 9 to 5 or 9 to 9. You don't want to be creating another prison for yourself. Think about that. If you're staring at the markets for 12 hours a day, and what sort of profits are you generating? That's another big one. Are you working 12 hours a day to generate $100? Or even, 200? To me, that's a long... It's a long day for that kind of money, but hey, yeah. Bored at work, that nothing to do in the AM at home, yeah. Where can I find those levels? Mentor Q is the company. I'm going to put it in the chat. Mentor Q. I'm actually going to be having a webinar with them on Monday, so maybe you want to pop into their channel. I'm going to be talking about oil and gasoline, and obviously we're going to chat about a whole bunch of stuff with Fabio and probably Patrick. That's the two main guys. Should be fun. I've done one webinar in the past with Anne-Marie and Fabio and Patrick. That was good. Vital says, do you have a rule to not open the trade just before the major news? Yeah. And how long the gap is to wait? It's a great question, Vital. Yeah, I close any running trades that I have into major releases due to the fact that my products sometimes don't react to all of the releases, like the NQ and ES and equities, because the equities are very sensitive to everything, right? You come up with jobless claims and they're like, oh my God, we're panicking. You come up with NFP, oh my God. But some of the metals that I trade, they don't care about like 90% of the releases. So you almost have less stress throughout the day. If there's jolts, like copper doesn't care about jolts, but it does care about CPI, PPI, and the big ones. NFP can be little bit tricky, but it's not like gold and equities, right? So in a way, it's almost easier because you have less releases to track intraday. Let's see if I can maybe adjust my posture, because Jerome was teaching us yesterday that affects us, even though my stomach is killing me, but it's all right. All right, let's carry on. What is the yellow and blue indicator? Is the company I'm going to... What? You having a stroke, Troy? The yellow and blue indicator is the visible range volume profile, VPVR. Here it is. And it tracks vertically how much volume is transacted. So it's basically a vertical histogram of the volume. And then you have the widest point of the volume profile, which is considered the point of control, even though it's literally just the middle of the middle. It's not a control of anything. It's just the fact that you can have point of control for two reasons. You either had a ton of volume in a short space of time that they have actually brought in, or you can have the price that is going through an overnight session and just printing volume, but not really moving the price anywhere. That also causes the POC to be created at those levels. But it's generally a good target. I'm not very happy getting involved, especially on these lower time frame areas. I don't like initiating trades in or around the POC. I will consider a trade from the POC if it's a 4-week volume profile, because then it's more of a supply and demand. You don't really necessarily have time, or you do have time, but it's across like a number of days. So if you had the active sessions and they built volume but they didn't move it anywhere, you have another day of a lot of active trading and then they still don't move it. That is a slightly different explanation, a slightly different reason for stopping where we stopped. That was a great explanation for stopping where we stopped. Oh, well done, the Eastern European in you is really going for it with the English language today. All right, I'm going to try front running the short here. 3 lots only and a 56 tick stop. 1-to-1, more of a scalp. And let's see if we can actually get anything out of this. Because basically my first hypothesis here is that we attempt to go lower. We either stop at VWAP or we go down to GEX 1. But we would need to go below the initial balance first, which we still haven't done. So this is the reason why I'm in with smaller than 5 micros. But yeah, if we manage to get a little bit of traction, then I might add. And even if we go higher, maybe I'll add 2 more, but not over the 5 maximum default size that I currently have. Ethan says, in South Africa, you can work for 10 hours and make 300 Rand in total, 15 bucks. So $200 isn't that bad. Yeah, when you put it that way, yes. But, you know, we do live, most of us live in, you know, either UK or we have Germans, we have French people, we have Americans. Right. Troy says it picked up my voice in the background. It was using talk to text. I see. Roy says, I'd say my biggest issues are market reversals when an order I place is filled. I seem to get out of a trade that goes negative too soon, but if I don't get out, it would run to max loss. Dude, you're trading with so much size. Like, so you're risking your entire account on one trade? Is that wise? So here's an exercise for you. Size down. Increase your stops, go down to 2 micros. 2 micros. That's all. Trade like that for a month and see how many revelations you have about yourself during that time, okay? It's a task. I'm giving you a task, right? Actually, just try it for 2 weeks. Don't even try it for a full month. Next 2 weeks, try trading 2 micros only. Why? Because why do stops give you time? They give you time, okay? They give you time to go, oh, okay, so now I'm looking at the market reversing, but is it actually sustaining the reversal, or is it just, and let me guess, you trade NQ. Just spitballing here, you know. NQ has like price action that looks like it's having a seizure intra-candle constantly. You need to zoom out, you need to size down, not risk your entire account on one trade. Because the risk of ruin when you do that is in the 1,000,000,000%. It means you have 0 chance of becoming consistently profitable. So I don't know what you're trying to do there, but I would urge you to start changing things. D, thoughts on CL. You can't size down lower than 1. You can, 1 micro. If you're using 1 micro, it would take you on NQ actually, what is it? It's 0.5. Yeah, so let's do this. Is this right? Let me just think. It's still very early, and like I said, I'm in a bit of pain, so my brain is not really functioning. So let's see how many ticks you would, or how many points you would need to lose on a 1 micro Nasdaq. So that's what I'm trying to do here. So therefore, so yeah, so this is right, isn't it? So I am dividing the max loss by tick value. So you would need to suffer through 2,250 points of drawdown on a 1 micro to blow up a 4.5K account. So, you know, something with your math is not quite right there. Do you think 1 mini? 1 mini? Is that what you're thinking? Because in that case, you only need 900 ticks to blow up an account, which is only 225 points. And that's very possible. So from the limited amount of information that I have, I would say that you're trading 1 mini. Hardeep is asking me whether I live in England or US. I live in England. I only go to the US if I have to. But I've lived in London for 23 years? Yeah, something like that. And now I'm moving in about a week's time. I'm moving to Surrey, which is also England, but it's countryside. I bought a new house there, so. Darren is saying, you mentioned earlier that many people scale in incorrectly. Can you give an example of how you would scale into a trade? Yeah. First up, do not double up your initial position size if you're pyramiding in. There's some argument to say that if you're DCAing or averaging in, if you're doing it correctly, just building a position around the zone, that you can double up because that will improve your average, right? But from a math numbers standpoint, if something moves away from you, let's do this in a combine because this is why we have it. So let's say I execute a 3-lot position, right? And it then starts to move in my favor. And then I enter another 100%. What's going to happen with my average entry? It's going to get worse, right? But if you only execute, let's say, a 3 lot, and then you add 1, that's not going to markedly change your average. I'm somebody who's very much into data science. I am, I'm a trader, so I'm going to wait until this one goes in so I can illustrate that. So when you add 100%, and if the market has moved away, even like 10, 20 ticks, you're just adding more risk. So what people then start doing is start messing around with stops, right? They're like, oh, I'm going to move my stop to break even. Not willing to accept the risk because the risk wasn't well defined to begin with, okay? And what do I mean by that? If you have, let's say, 56 ticks stop loss as a default, but you want to front run your trade and you say, I'm thinking market structure wise, we're at the top or something, and then I'm going to be using a 30 tick stop, 33 tick stop. So when it moves in your favor and you add 1, that will maybe make the average worse, but you're still working within the same 56 ticks designed stop loss. Does that make sense, right? So 56 ticks is the stop loss that you want to end up with, not like 110, 200, 300, which is what happens to most people. And then they're like, oh my God, I'm going to lose so much money. Let me move it to break even. That's fear talking and lack of strategy around scaling into trades, pyramiding in. So the good way to do it is to have a lower stop loss at entry and then to add 1 that will increase your stop size but still within the boundaries of your maximum default stop and maximum default size, which in this case might be 5 micros. So you start with the biggest position, add 1, add another 1, and then let it run, okay? If it moves significantly in your direction, I'm actually more in favor of partials around 2R multiples and further, especially if you want to leave a runner for 3R, 4R, 5R. But generally, if you're going to scale in, what I see people doing is they start with their maximum default stop loss size, let's say 20 points on NQ. And they start with their maximum default position size, let's say 5 lots. Then it moves 10 ticks in their favor, they add 100%, and now they've increased their risk, not just by the size of the stop loss, but also went massively over the maximum default position size. And they're like, oh, this is not working. Oh, I'm so surprised. It's not working. So just like you're defining your risk on one lot with one stop loss size without adding too much stuff to it, the same way you need to plan out your pyramiding in, okay? What is your maximum stop loss that you want to end up with? And if you don't know, well, that's your first point of problem, right? So if you're entering something with a view to add more, the initial stop should be smaller and the initial size should be multiples of the maximum lot size so that you have space to add into it, but not starting with your maximum default size, whatever that might be. And if you're asking me, maximum default size, 15? No, maximum default size depending on the buffer that you currently have in your account. That's not the size of the combine eval nominal value. That's just the size of the buffer, the bankroll, right? Bankroll management. I just think that people scale into trades willy-nilly and they're like, oh, I blew up, boo. And I'm just like over here going, yeah, that is the expected result. Paul H says, mate, says he's talking to Roy, says I pass all combines with micros only and max size 5 micros. Yeah. And Paul, you've been invited to the live account now, right? Am I right there? Because I know that you mentioned something. And again, I'm not surprised. Yeah, you see? Yes, I trade 1 mini. Dude, micros, no minis. So Darren, does that clarify things about scaling in correctly versus incorrectly? It's literally just down to how much stop you end up with and whether you're working around your maximum default size. That's it. Yeah, Paul H also says, when we say size down, let's put some numbers on it. I switched from micro to minis when my account has 10K available drawdown on the day, and I'm considering moving that to 20K. I've learned my lesson. Yeah, I prefer to have 20K for minis. That's just me. Also, how long would it take to pass the combine with only one mini? 3 years. Are you, like, what are you looking at, man? You have, like, on NQ, like, these people, it's just, what is going on? Like, I might, like, did I just walk into a Twilight Zone here today? What is happening, Chad? Like, me and Paul H are, like, talking sense here, and here Roy is like, you have 1,700 ticks available as an average range in a day on NQ, which frequently goes on various runs that are pretty extended. If you're trading 0.5, and let's say that out of those 1,700, you only catch about 30% of that, which is 510, in one day, you will be making $255, and for let's say a 50K target, so 3,000 divided by 255, you have 11 days to pass the smallest evaluation if you're just behaving yourself, controlling your risk, and only making 255 per day. Okay, let's put some math to it, right? And then if you're going for the 4,500 and you're still only averaging 255, boo-hoo, it's only going to take you 17 days to pass. Now, I'm not saying you're not going to have some losing days or stuff, but let's say 2 to 6 weeks, like Paul H has just advised, very normal. And 6 weeks is if you're really messing things up, right? So like 2 months, not even 2 months, 1.5 months. So while you're over there, Roy, blowing up combines in one day and putting all of the account max loss on the line in a single day, you're buying resets, you're buying more combines. Paul H over there has spent a long time working on his skills, and he is now, I think you've been invited to the live, right? Like, do let me know. Oh, not yet, but they're watching. Okay, yeah, you see? So this is the thing. Size down, slow down, and still generate alpha. That is what the risk team wants to see. They don't want to see people who are full porting it one day and going through a million combines all the time. In fact, I believe now they have a maximum number of combines, which is like a unicorn in the space of prop world, and completely the opposite to what other people are saying, that prop want to rinse out traders. Guys, you're doing that for yourself. It's like prop has nothing to do with your bad habits. They have rules, and if you can't follow those rules, and you're still like, just think of the Roy's texts here, the chat messages. How long is it going to take you to pass one combine with one mini? And he's like, 3 years. 3 years? It's only 9 grand for the biggest combine, and look at these numbers. 11 to 17 days if every single day is 255. But let's say we throw in some days where you lose money. Let's say you lose some. Yeah, it's going to increase it, but it's not going to increase it by... If you have a profitable system that is consistent over time, because remember, even in trading, we cannot escape from the second law of thermodynamics. With extra time, entropy increases. Disorder continues to put in a wrench in the works, and something that works for a week but doesn't work over 6 months. Can't get away from entropy, even in trading, right? So let's get a bit serious here. It's like, and stop making shit up over the numbers that Just like 3 years. Really? 3 years. CFA cut from above says, I'm in a cycle passing the combines to blowing the XFA without a payout. CFA, I would urge you to watch Neuro Wednesdays. So go back, like they're not time sensitive, right? They're just neuroscience related to trading. So me and Jerome are working on creating this course. Not me, he's the one doing most of the, all of the work actually. I'm just the presenter on Wednesdays. He's a doctor, he is an expert, he is somebody who's extremely knowledgeable, and he's one of our best traders as well. We spend the entire sort of hour and a half talking about how you can replace some of the bad habits. Now, one of the major reasons why you're blowing up an XFA after, without a payout is because you go probably too much size, and then you get into a drawdown, which psychologically affects you. I always say for the beginning of the XFA, put a personal daily loss limit at, so you know the risk settings that we have here. Put this to 150 and only trade one micro, block out the big symbols. So you can put a symbol block here. So only micros. And then the day before you're going to trade, lock out the settings for the day. That way the next day, you don't have an option to change them. I would actually like them to create a possibility to completely lock yourself out, like for the entire week, so that you can't touch anything until the weekend. And it reinforces a discipline. Some people would say it's a crutch. I would say that it's the beginning of ungluing yourself from bad habits. When you don't have a choice, your brain will learn that that is a better way. But without the self-awareness, and self-awareness is where it all starts, right? It doesn't start with discipline. It's not really discipline. It's self-awareness of what we're doing wrong. Okay? Just waiting for this to move. It's a quiet day. So I can show you how not to enter, but I'm not going to show you on this account, obviously. It's the one that matters. So I would advise you to really put shackles on yourself for the first, and expect that the first couple of weeks is not going to go well. Front run the behavior, right? So you're going to be like, okay, now I'm in an XFA, and they'll go, yes, because that's your dopamine levels going out of whack. Dopamine increases motivation and productivity. As a result, for traders, that means overtrading, oversizing, urge, and itch to trade the new account. Resist the urge. Okay? Do something else. And then it's oversizing. You get yourself into a hole on the first day, then your psychology changes, and now you're trading from the point of trying to bail yourself out of a trade rather than looking at the quality of the setup. So you are scarred by the previous day. We literally talked about that yesterday. You're scarred by the previous day's decisions, and now you're like, oh, boo-hoo, I'm terrible. And then you start saying things like, I'm a muppet, I'm an idiot, this always happens to me, like all the victimhood mentality comes out. You have to own up to it, and you have to go, where did I go wrong? Without being mean to yourself. There's a very big difference between going, what did I do wrong? What did I do right? Now, for most people who blow up before a payout, it's oversizing, overtrading, not following the downside risk control rules, so giving themselves a wide leash on the first day, not even putting a personal data loss limit. It's like YOLOing it, yay. And then it doesn't go well, and you go, no, I will stop when it gets to minus 500. Then it gets to minus 500, your fight or flight goes through the roof, you're now sweating, you're now looking at the screen every single tick, you're all tense, your breathing is shallow. You can't trade from that mindset. Do you see me getting upset every time I lose here? No, because I don't give a crap. I'm just like, it's defined risk. It's defined risk. It's like, I know that I'm not going to lose my shirt, and I'm not going to jeopardize the account in one single trade. And I use stop losses that are wide enough to allow me to talk and to allow me to capture bigger swings. If you look at my average trade time, average win duration, what do I have? 103 minutes. Average loss duration, smaller, but I'll still give it time. And do I sometimes scalp? Yeah, sometimes, but for the most part, I try not to. I try to look for big chunks, and therefore I'm a little bit more selective of when I'm going to trade and what I'm going to trade. But if I was trading one product the way I'm trading, I wouldn't be trading 3 to 5 trades per day. I would be probably looking at more like, one trade every 3 days. But because I trade multiple things, it allows me to find more opportunities, right? Not saying that you should start hopping through products, but if you're struggling with one product and you can't make it work, consider that a part of your approach, a part of your system and your strategy, even though it might be somebody else's strategy, a part of your usage for that strategy is how are your emotions while you're doing it? Are you able to follow it on a product of your choice without losing your shit? No other way to say it, really. Yeah, D gets more upset. Stefan says D gets more upset about chat than trading. Yeah, because it hurts me, guys. Like, I'm here. Yes, I'm here for a bit of social with everyone. That's always nice because I don't go anywhere. Hermit lady over here. But the whole point of us sharing our experiences is because we know this is tough. We know trading is difficult. And we're trying to impart our experience that we've come by with great difficulty to tell people not to create the same mistakes and to make the same mistakes that we made as newbies back in the day, right? So we share our struggles and we share everything with you. I pour my soul out. I tell you how I changed things around that worked for me in the end. And I'm like, this is the step. These are the steps. All you need to do is just follow them. And then people go, blown account. I just want to sit here, get a gun and just go, that's why I got a parrot. I got a parrot for you guys to illustrate. I'm learning how to be a ventriloquist. Here's the weird reality of my life. Eddie was giving me lessons just the other day, because he's a puppeteer. So he's like, how do you learn how to not move your mouth? I'm terrible at it still, but he said, take a pen and then put it in your mouth and then try to talk through it like that. So that's what I'm doing. I'm learning how to be a ventriloquist now. So that I can more realistically represent the parrot telling you to size down and slow down. Mo says, trading small with micros will make you take trades with the greatest potential. With minis, any small movement could give you a decent profit, so you may be more complacent on setups. But also, it's going to make you more emotional because it's going to be like, oh my God, there's so much movement in relation to the account size. And our tolerance for drawdown in a trade diminishes directly proportional to the amount of buffer in the account, okay? So the less buffer you have and the more size you have on, the more you make bad trading decisions. Remove the size from the equation and get proof of concept first. What are you going to be doing in an XFA if you can't prove to yourself that you can trade consistently with small size? Nothing. You're going to get a blown up account and no payout. We want to change that. Topstep is changing things. I know that Michael Patak gets a lot of slack from the community who really don't know what they're talking about. Like this whole SRO thing, they're like, they're going to be sharing data. There are laws against sharing customer data, whether you're an SRO or not. And if you are an SRO, you have to abide by that same rules. It's not like now we're above the law, so now we do whatever we want in our little organization. It doesn't work that way. There's this thing called the law, yeah? Everybody has to be governed by that. But as the self-regulatory body, CFTC and NFA, they're all self-regulatory bodies, okay? But they have rules that are within the general legal structure of the USA and the federal laws. Yeah, they're not above it. They just have cases, they have fines for doing practices that are considered harmful to clients, right? All right, so this has moved a little bit. Let's go. It still hasn't moved past this. God, it's so slow. Jesus. Is there anything else that's moving that I can illustrate that's adding into a trade business? Let's try YM because this is annoying me. So MYM. All right, so we're going to be going willy-nilly. Breakout. Oops. Change the dome D. Change the dome D. Okay, so let's do wider stop, breakout, give it some room. But still, let's say that you have a default stop, because on MYM I actually have 140 tick stop. And then I add into it, but let's kind of cut that a little bit. Actually, let's cut it to here. Even though I hate putting stops below the non-relevant lows that are about to be hunted. But let's just hope we've got some volume here so we can take this away. So what's going to happen? Okay, some size at 41,118. So let's see. Let's see if they pump. And then I can show you why it's not a good idea. But let's say that my default stop size is 77. And now I'm screwed, right? Because now if I add, it's going to increase my risk. So that's not what we want. But let's work from the assumption that my default stop actually wants to be 140, ultimately. That is what I'm aiming for. So now I can add the good way. I will be adding 1 and 1, not 3 and 3, okay? Because my maximum default size is 5 micros, not 10. So once I've added, my stop size will increase, but because I've got 140 as a default, that means that I can have a little bit of space to mess up my average and still stay within my maximum default size. But if I now go and add 3, once this moves even higher, what are you going to get? You're going to get size that is not appropriate because you're going over your maximum default size. It's now 6 rather than 5. And then you're going to add again another 3. So that's now adding a third onto the position that's already messed up the average. I hate that. I don't like that. So whenever I'm adding into a trade, I make sure that I start with a smaller stop to my default stop size, and then I will work within that. So if my last add into the trade will take me over the 140 ticks, I will not do it. I will just stick to 4 lots. So basically, don't add 100% if you're pyramiding in. Work within your maximum default stop size and work within the maximal default size position-wise. Right, let's see whether we have a couple more questions. Dee, can you explain ADR and ASR and how I use them? They are plotted over the last 10 days. ASR is regular trading hours averages, average session range. ADR is average daily range for the full 24 hours. And then I have an indicator that we coded, it's my concept, where I take highs and lows either of the day of the session that are being created, and that is basically created, that's basically creating a calculation until one side exhausts the mean average number from either ADR or ASR, depends on what you're trying to do with it. And then at that point, that becomes an exhausted level and it stops moving. Now the other one can still keep moving, but it's at that point, you know, you might have a single direction day or something. So I have a couple of ways of doing things, but the primary way is to use them as levels and as a quantitative exhaustion levels. So you expect the price to get there because that's what it was doing for the last 10 to 14 days. Some common sense needs to come into this consideration as well. It's just not letting me, like, this is the London sessions. It's not letting me like go into one like sort of moment. This is why I hate momentum trades, right? You suffer so much drawdown for so much pain. And all I'm trying to do is like illustrate what it looks like if you get a position that where you're scaling in wrong. Now, for me, I would be adding to trades. So, for example, I know that my MAE on YM is about 80 something ticks, so I wouldn't be surprised if it goes all the way down. But with 140 maximum stop, I would start with that, and then I can go smaller than that, but not bigger, right? So I use my MAE number to DCA, and in that case, you can kind of go double, but because I still have my maximum default size is 5, I would only be adding 2. So that would improve my average and reduce my stop size. That is the concept of building around a position. People do that wrong as well. They just keep adding to losers, and then they widen this, they stop, and then they keep adding. And I'm like, why are you widening your stop? What are you doing? It's like, no, stop it. Yeah, in the 150K subscriber next week, I'm going to be talking about this as well in some great detail. I'm just looking at copper. It is kind of making a move. Let me grab another. I mean, it's not a massive move, but it's enough. Maybe I should have stayed on copper. Yeah. So if I were to now add 3, you know what? I might put a dent in this account, but let's add 3. Oh, of course, now I'm on MIM here. Christ. I need to take some painkillers, guys. This is not good. I'm losing the plot. All right, so let's just add 3. So what have I done now? I made the average entry more terrible, and I increased the stop. So now I can adjust my stop down. And usually when I see people doing this, they will be adjusting the stop to like break even, like immediately. Why? Because it's too much size for them. And I'm like, dude, you're in with like a lot of size there. And the reason why you're moving stops is not to protect your position. It's to avoid loss. You know, you spend so much time avoiding the loss. But, you know, let's say that my maximum default size is 9 and I still want to keep adding. You can keep adjusting your stop to the same 56 ticks, okay? So you enter, but just be careful because at some point you start breaking the market structure with your stops. And now if I place my stop here, that's like complete nonsense area to place a stop. Do I have structure to define the stop that way? No, I just have this area as the structure, right? That's my reference high. So be mindful of the structure when you're moving stops. If I now move my stop somewhere here, that's like cutting through candles. We're kind of going down. This is not, maybe if we could go down, then up and then down again, I will have a structure that's new where I can trail my stop. Even though I don't like it. I just commit to the risk and I just go, it is what it is, right? But at the same time, if it was in profit a little bit and then it starts dragging against me, I will close it early. Like I'm not going to just sit there. Like sometimes I'm fully okay with taking a hit, -1R. That's why that stop is there. But if it doesn't, you know, if it doesn't do what I want it to do, why would I stay in? Like why would I, if I have enough time to control my position, then I will exit, right? I will exit early. But people exit, oh, it's going down -6, click. And I'm like, it hasn't even had time to breathe yet. Like the trade is not even alive. It just took a one breath and you went, no, and you kill it. Give it time to have a life, develop, to go to kindergarten, then to school, then maybe college. Give it life. Don't kill it too early. All right, I'm going to take another question, then I'm going to be out of here. I started using the I started using the risk management tools after losing a couple of XFAs. I realized I need protection against myself. Hey, mate, we all do. Even after 18 years, I still have some days where I'm like, whoa, D, maybe you want to like slow the F down there. I am my worst enemy, was up 2K, but wanted more with no downside protection. So here's the thing. Why did you want more? Was that a rational decision, or was it just driven by pure greed? It's like, 2K, that's great money. How much more do you want? And for what? And all on the same day? Why stop at 2K in that case? Let's go for 10K. Let's go for 20K. Hey, let's go for 100K in one day. Why stop at 100K? Let's go to 1 million. Where does it end? So you need to get to the root of that. Why did you want to keep going? It's some kind of a dopamine rush. Somebody gave you a dopamine fix, and you're chasing that. You're not chasing. It's kind of like having a drink and it makes you feel nice, and then you keep drinking because it makes you feel nice. But then at some point, you either pass out or you start throwing up. And that's the same thing with trading. So your account size gets up to a certain point, and then it runs out of steam, and then the account starts vomiting. It goes back to 0, then red. So that is not trading your setups and your plan. That is letting your dopamine rush take over and just going along with it, and completely not taking control of the deliberate thought process that we must have. I know it's so easy to just click a button, right? It seems like it's all it is. But really, you have to have some really deep psychological skills in order to make trading work consistently, especially these days. There's no pits. You can't see Goldman buying or selling. You can't see the guy next to you in the pit sweating away, or somebody who's doing well so you can follow them. There's no such thing anymore. Now you have yourself, the screen, maybe TopstepTV sometimes, but for the most part, we're alone, right? And that brings us so much internal turmoil. So if you don't get ahead of it, and if you don't go, hey, I'm up 2K, how much more what am I trying to achieve here? And is it actually just my emotions and dopamine taking over? And then you go, actually, yeah, that's probably right. So let's stop. Let's stop on the day. Wouldn't that be better? This is why we do Neuroscience Wednesdays, right? Neuro Wednesdays, to help you to stay aware, to first and foremost, become aware of your behaviors that are bad, right? Anything that's riding on a dopamine rush, or, the rush of passing a combine, reaching a goal. All of that throws your baseline dopamine levels out of whack. And if you don't know that that's happening to you, or if you're not accustomed to it, it can completely derail the new account. Because now you want to trade. Now you're like, oh my God, I'm itching to trade. Is that rationality? Or is that just you riding the dopamine wave? So yeah, let's try to stay aware of what you're doing. And like Rex said, he started using the risk tools to save himself from himself. That's certainly a good first step. But at some point, you need to own up to the behaviors that you've noticed in yourself, journal them, and then try to actively get ahead of them next time they appear. That's the whole point of tracking mental triggers and making sure that you're not doing the same actions that caused a negative outcome last time. So Findy, natural gas long is paying, but this inflection point, could it reverse back? It's probably going to reverse, but not but not before NYMEX, because it usually does this thing where London takes it one way quite violently, and then NYMEX comes in and completely smashes it back the other way. But yeah, natural gas around about this time starts moving. All right, guys, I am going to call it a day here. I'm going to finish the stream because I do need to be a little bit mindful of my health. I will see you on Monday. Yeah, Monday. And actually, no, I will see you on the main broadcast later on because I am on for the rotating segment. In the meantime, check out our Discord. Rex says, even as a seasoned trader, would you trade larger size or 50K? No, I would trade smaller size within the confines of the account. Coach Dakota has a very high, like he's much younger as well. So when I was younger, I was traded with more size. But then, you know, you get a bit older and you're like, oh God, that's very stressful. So he has a big risk appetite and he can handle huge swings. You know, he has no problem going through a 40K drawdown in a month. I do. So yeah, for me, if I have a drawdown of 40K in the space of 3 months, that's just about okay. But even then, I would rather have a 40K drawdown across an entire year. So there it is, you know. All right, finally, I have the casting call form for you. If you want to come to chat to us about your journey, get to know everybody, fill out the form, and I will see you again for the lunchbox trading later on. I think Coach Jay and I are on. In the meantime, size down, slow down, and let's try to be less grasshopper, less muppet, and more market stalker with every passing day. Thank you for being with me. This has been the Euro Trade. I'm Deeyana Angelo. Take care.